All right, and I think what I'll do is I'll use a limit order just above. Yeah. All right, so I got 6 as a limit order, and for now I'll just put the stop loss right above fair value gap, targeting the sell side here. I'll manage this as I go. I want to see if I can build my typical 10 contracts into this. I want to limit entry, not just marketing entering. I'll change this to 4. And just a little bit below that, we'll try to use a entry there. So that will be 10 contracts short if it goes up inside that fair value gap. Now, the only thing that concerns me is because we have that large range up close candle to the left of all of this decline, and the fair value gap I have noted here, that might become a balanced price range, and it may not even enter back into that. So I'll have to wait for a subsequent or later fair value gap. I've run the risk of missing the move, but it's better to miss the move than to try to chase it. So admittedly, I'd like to short it right in here, but my stop would be at 42.12. So it's a little bit more points drawdown than I'd want to suffer. So I'm willing to let it go here. Hopefully it goes up and hits the limit order, and then I can work towards that limit order at 42.03. I suspect it's going to go lower than that, but I have to see how it trades in here. If it trades below 42.03, then I'll just cancel the entire trade. It would be too far down for me to consider that fair value gap. So we're technically inside of my ICT silver bullet time window. So we're 2 minutes, 3 minutes almost after 10. And we have just now tapped into that low that was a draw on liquidity for me. So I'm looking at that, wondering, do we get a shallow drop just below it, maybe 1 or 2 ticks, and then leave that shaded area intact? Because I think we'll try to dip below that 42.01 level. This is how it is sometimes, folks. It might run without you, but I'm going to give it the benefit of the doubt in here. If this candle can close and leave that previous down candle, these are all 1 minute candles now, if it can create a fair value gap in there, then I'll adjust that rectangle down to that, and that would be my silver bullet. Expecting the one that I have shaded now as a silver bullet as a breakaway gap. In other words, not seeing it trade back up into it. I think that's what I'm going to do here. I'm going to drop this here and here. So it's kind of like an evolving silver bullet. So I think that initial range up there, let me get these off here and adjust this just below here for now. And now I'll take you visually into what I'm looking at. So that right there is the low, and this is the high of the new adjusted silver bullet. So it's evolved from what I thought initially was around that 42.10 level. Now if it can trade to 42.06 and a quarter, and Note that shallow run under. See how it just went like one tick below the low I was leaning for? So now I'm really feeling confident that we're going to go up and hit that new adjusted and evolving ICT silver bullet. And I'm going to go trade back down into the new week opening gap high. And actually, I don't really want to do that. I want to do a layering. I think we're going to go below new week opening gap high. I'm going to reduce the stop because if it fills it, it shouldn't go up there. Trying to think how I want to. Okay, well, we just got to fill. So all 10 contracts are now short. Stops at 42.08 and a quarter. Get this off here. Then what I'm looking at is how I want to do my exit. I want to see if we can drop in here, which is what I want to see. I want to see it like run quickly away from that gap. That would be, in my opinion, confirmation that on one side I'm in line with institutional order flow, and it will want to reprice down into my new week opening gap high and maybe consequent encouragement. But I want to try to take the bulk of the move off, so I'm going to cancel this here, and I'll do some layering with some limit orders. So I'll click on there, buy limit. So I'll take 4 off just below the new week opening gap high. So far, price is looking strong for me here. Weak in the sense it's going lower, but strong in the idea that my trade's short. So I get a measurement here for consequent encouragement so you can follow along. So 41.93 and a half. We can work with that. I'll take 4 off there. So that remains a balance of 2. I got to change that 4 to 2. And I'll take it just about 75% of the new week opening gap range. So there's 4, 2, and 4. So if this puppy runs, I'm locked in with a really respectable amount of profit if it can hit it with relative low risk. So we'll just sit here and watch the price action. Just removing the fib here, so that way everything's clean now. We can all watch whether I'm right or wrong, which is irrelevant, but this is the price action. I want to see it really just wipe out that low. It's that little shaded area. That is the difference between Friday's price and where we closed and where we opened this morning in here. So I want to see it work really aggressively below and really draw right back into that current new week opening gap high. And then it should, if everything is accurate in my observation, we should see it really sink lower and attack that consequent encouragement 41.93 and a half. I run the risk of it going completely into, one second, let me stop here, as we take our first profit. Oh, look at that, second profit filled. And let me get this out of the way so you can see the 4 remaining contracts. And there we go. Nice. Got a triple. So that's what a evolving silver bullet trade looks like, and using new week opening gap.